You're having a good day. My name's Andy. My channel's Finding Value. Today we're going to rip through Twitter, see what people are sharing on social media. I'll interject my financial opinions, generally related to three different topics: wealth building, commodities, and or financial topics. So we're going to dive right in, take a look, see what people are sharing. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com, where I dive deeper into all of these topics and subjects, looking for potential investment opportunities. And there are a lot of opportunities right now in the energy space that look pretty good. May Day coupon code if you want some savings when you sign up. 50% off the first month on the monthly membership, first month only, and a larger discount on the yearly membership for anyone who wants to sign up for a yearly membership. Coming on down, energy headline news. The head of the security office of Kataib, whatever, Hezbollah in Iraq, Abu Ali, whatever, stated, if the energy war begins, the world will lose 12 million barrels of oil per day. 12 million. Guys, that's going to moonshot oil if that does materialize. With that 12 million barrels, and I don't even know of 12 million barrels, we've never had that type of loss of production. I mean, even a loss of a few million barrels is probably, you're probably looking at least multiple hundreds of dollars of barrel per oil. But CNBC, oil market faces a rude awakening if Iran's energy infrastructure is targeted. The key points from this are the oil markets are being too complacent given the risk of major supply disruptions in the Middle East, analysts told CNBC on Thursday. Bjorn Schieldrop, chief commodities analyst at Swedish bank SEB, said that if Iran's oil infrastructure is wiped out, prices could easily go to $200 plus a barrel oil. It comes amid speculation that Israel could be planning to launch a retaliatory attack on Iran targeting its oil infrastructure. I hate to say it, but the charts already have this priced in. You guys have all seen me with the charting. Let's just go over here. We'll look at the charting real quick, okay? So let's look at the charting for oil. So we go to U.S. oil. I've showed you guys this chart many times. I like putting it on logarithmic, put the line chart, we scroll on out, and what do we see here? This circle, which is here, is in the same spot that we are today, right there. We're doing a retest. So what you do is you break out of a long-term consolidation. Your consolidation is here, your consolidation is here, your consolidation is here. There's three consolidations. We broke out of that consolidation and we're doing a retest just like we did last bull market. What is coming ahead of us is a move higher. And I don't think war, they need something to blame this on, guys. They're screwed. They are screwed. So they need something to blame on. And it just so happens that we're going to go to war exactly at the same time that oil is about to spike. This one, which was going to happen irrespective of all that money and stimulus that was printed in the system, you know, this big oil boom from negative all the way up to 120. Well, they blamed that on the Ukraine war, even though that had nothing to do with the Ukraine war. Well, this is what's occurring next. We're gonna have a big move. It's called Wave 3. It's going to look very similar to this. So this is what it will look like. I'm just going to overlay it on top, and then I'm going to expand it with the same fractal sizing. So this is what's going to occur, and we're probably going to go to some level way up here. At the top of this, depending on where we hit it, we've got $500 per barrel oil, or if you hit it later, it could be $700 per barrel oil. There's also the possibility that we have a throw over top that looks something like this. So I'm just going to kind of throw this in here and then expand it on out. And it could go all the way up into $1,000 per barrel oil out in the future. And that is possible, not what I am projecting. So I think multi-$100 oil is a likelihood. What they need is a scapegoat. They need a scapegoat and they need war or something so they can blame it on something. oh, Iran or whatever, as this goes all the way up. And maybe that accelerates the move in a faster pace. I don't know. But I'm going to be laughing if oil does get up there. My dividend yields are going to be ridiculous because I'm priced for this. And here's the thing, guys. This is what I'm going to tell you, and this is my opinion about the topic. This here, no matter what excuse they make, was going to happen no matter what. And that is how I know to position at the bottom. And I wish I could have positioned back there. I wasn't investing at that time, but I invested here and I've been holding on this entire time. I'm bullish for the entire bull market. I am a rare breed. I'm able to hold on through thick and thin, through pullbacks. And I have what I think are the top 4, 5, 6, 7 different oil companies that will provide the highest returns in this type of environment that is coming. So they're high cost producers. They're going to give me big margin expansion when oil goes up above $100, $200 a barrel. People will say, oh, well, people will get hurt. There's nothing I can do about that. All I can do is control my actions, where I put my money, learn about the markets, learn about economies, learn about governments, and then best place that money to make money for myself and my family and protect ourselves against this, I'll call it insidious inflation that governments have around the world. And if other people don't want to do that, well, there's nothing I can do about that. They will be at the whim and react to whatever comes. But in my opinion, this is going to come no matter what. I don't know the path. I didn't know if we were going to dip down and do a slingshot higher like this one dipped down. This was 9/11, that dip. I didn't know if we were going to do another false flag event to get it to come back down and rip. But this looks like it wants to go higher over the next 5 years or so or longer. So I think it's coming no matter what. But now the news is coming out with all this stuff of what the potential move could be. And I was always in the camp of going over $200 a barrel oil. Here's North Star. Ethereum is down 66% priced in gold. So he's looking at it from a ratio perspective and is in a bear market. So Ethereum versus gold, you can see we are starting to move lower. And we had a bear market back in 2022. We have another bear market that looks like it's starting. You could draw a trend line through here coming across, and it looks like it's broken out. And we could have a big bear market in cryptocurrencies, NASDAQ, and some of these other ones. We could have a huge bull market in gold, silver, oil, stuff like that. And that's exactly what I think is coming. Ethereum is just it's a thing that people trade. I'll call it a thing that is indexed to the NASDAQ. Now, will this thing exist in the future? I have no idea. But I've got my own opinions on it. Coming on down, momentum structural analysis. This is Michael Oliver. He says, notice how silver and gold are no longer caring about the DXY strength here. Same with commodities in general, especially energy right now. Nice to see that assumed anti-correlation break. And that's exactly what I thought today when I looked at gold and silver. I said, hey, it's breaking. Then I saw his tweet here, and I was like, oh, I got to share that. I got to share that. So we could see a breakdown of DXY strength and the correlation with gold and silver moving higher at any point here. And what that means is that people are going to be less willing to buy bonds or hold bonds, more willing to buy gold and silver. And this is going to be, it might be similar to other times in history, like the 1970s. Joy of compounding. It says, one of the best hacks in the investment field is learning to be happy doing nothing. The joys of compounding. And the joys of compounding, what that means is that people want to do stuff with their investments, change it around, flip it around, don't have a strategy, and they ruin their investment compounding returns. That's probably one of the most, I would say, one of the most frequently done thing amongst investors is they cannot sit and do nothing. And I am trying to become a student as best as I can to do literally nothing. Get your good entry points, like I did in 2020 with oil and uranium and some of these other ones. And obviously, I'm continuing to add on dips, but I did nothing with those original investments. And that is what's made me all of the money that I've got today. It's actually a life changing amount of money. I started with what I consider to be not that much money, um, and now it's a lot of money. Some of those investments have wildly exceeded my expectations. 20 times, 30 times my money. And I think by the end of the bull market, they could be well over 100 times, 100 bagger from where I purchased them in 2020. And I did not think I wasn't thinking that I was going to have returns that big, but I just knew that the opportunity was there. I knew it was cheap on a ratio perspective. The technicals look good. I basically used the three pillars that I came up with and teach on the website, so you guys can do it too. And there are certain sectors that are down right now that I think might be able to do it. Some companies in energy service and some companies in other sectors that are not correlated. And I think we could get big returns on them, but you have to be patient. You have to learn how to do nothing, which is hard for a lot of individuals. Dow Gold equals 1. So silver's cup and handle measured move is to $600 plus, but a move to $1,500 an ounce wouldn't completely surprise me. The silver bull doesn't really get going until $50 an ounce is broken for good. And where he is getting this information from is he's looking at it from a logarithmic perspective, which you're supposed to do. You get the size of the cup, you take that cup size and project it on top of it. And that's where he's getting these big areas. He's also looking at the lead-in pattern of the cup and its potential from 1970 all the way up is another projected move that you could do. So you could get between $600 and $1,500 an ounce, depending on what projection you look at. Now, is this going to happen immediately? Probably not. I've been in silver since 2018. And I purchased a little bit before that, but not nearly the same size. 2018, I added a lot of size in that in those purchases back in 2018. 2019, I started to purchase a lot in platinum, and 2020 when it was down in the doldrums. But I purchased that for this move coming up in this bull market. I've been patient. I've been holding on. I think it's a lot easier to hold on with physical metals because you don't see the valuation moving up and down in your face. I also think that it's harder to sell it. You can't just click a button and emotionally get scared out of something, which I think a lot of people do. So I think it's a lot easier to hold physical metals for this bull market. I think we're going to go way higher. What is this telling us? How could we get to this amount? Well, we could get to that amount if people get scared. If they get scared of the currency system. If oil goes way up, say $200 plus barrel per oil, which some people are projecting could happen in a war that we went over earlier, then you could also have people get scared out of the bond market. So the combination of currency devaluation and people being scared of the bond market and interest rates rapidly going higher could be a combination that sends us to a much higher level. Grady says, silver looks to be itching to go. One can really feel the tension in the silver market now. It really wants to break the 32.77 level. Are you watching history? Let's see what happens when the USD backs off a little. And what he's looking at is that breakout. And if we get a breakout of the 32.77, we could run. If we could run, it activates the bigger patterns here, the big boys. And those big patterns are the fuel to launch you to these much higher levels. That's what we're all looking for. And also, we very well could be doing this with oil. Oil could be one of those things that starts it all. It could be. And interest rates could go up uncontrollably. If interest rates go up uncontrollably, the bond market could potentially have major problems. You could also potentially see problems in the S&P 500 and NASDAQ as interest rates go up. And that's where the fuel could fuel this to some ridiculous level. JC says it's not just lines on a chart. It's a visual representation of what is actually happening in the world, not what might happen or could happen, or worse, what should happen. A price chart shows what is happening. To me, what is happening is most important, hence all the charts. I agree with what he said. A chart in the price movements is a vote of the market of where money is going. And that I'd like to see not what people think, but how they're voting. If you accumulate where all the votes are being placed, then you can see what the market thinks in aggregate of all these different sectors. And then you can kind of puzzle together, piece all the information, and put together this puzzle of what the market thinks about the economy or what it thinks about interest rates or whatever else. You can kind of piece it all together. Oil markets fundamentally healthy enough to support prices here? Yes, they are. And this is where we're at right now in terms of global oil inventories and oil on water. We are at a very low level. Now, with all of this risk, geopolitical risk, and oil being where we're at, it's not being priced in, guys. We could easily be at 120 in a heartbeat. And with all those people that are positioned short in the oil market, they could all get squeezed. We could get a very big move in the price of oil over the next few months. Oil has so this is North Star. Oil has no choice. It is very, very likely to start moving up. Forget narratives and fairy tales, war, etc. Simply look at the evidence. Gold, silver, and oil always move together over time. Why? The debt dynamics and currency devaluation. Simple mathematics. You've got an E there, but this is what we've got historically. They all move up and down together. Gold's already been ripping. I've said that before. Silver's starting to move up, and I do think oil is just lagging behind. Oil is an incredibly good opportunity because it is the cheapest of these three. Oil is cheaper than silver on a ratio perspective right now. Let's go take a look real quick. I just want to make sure you guys understand this. The gold to crude oil ratio is currently at 36.2. Here's something that looks really obvious to me. So I'm just going to show this real here. Let's draw a line across. Here's this, and this. What does that look like? If we get to this level, and this is an inverted head and shoulders, the projected price move of this would literally go to 0. It goes to 3. That's the projected move of this head and shoulders pattern. If we get a 1-to-3 ratio against gold, it means that oil goes to some ridiculous level. That very well could be a shoulder head shoulder on the ratio chart and a potential move lower. If we get to 3, guys, I'll just use $3,000 gold because gold will probably go up divided by $3,000 oil. And this is not my opinion. This is just the markets and the patterns that we are getting. Now, what if, and I don't even want to speculate, but what if gold goes way higher? And what if oil goes to some ridiculous level where, we got to price a lot of demand out? I don't know. All I can say is the dollar is probably coming under pressure. We could see oil fly. We could see gold fly. We could see silver fly. And these patterns are so big that it makes me think that this could be game-ending moves for a potential currency. Very well could. And I don't know the time frame. I don't know the time frame. Coming down, bonds posted negative real returns on average for 80 straight years from 1900 to 1981, a time that saw unprecedented technological advancements like cars, planes, medicine, etc. They posted positive real returns from 1982 to 2021 and had a bad 2022 year. Why does consensus assume that 1982 through 2021 was normal. And this is going back with all these negative returns versus history. And guys, if we get this type of inflation, I think interest rates are going to go up. China ready for 1.4 trillion fiscal bazooka, top economist says in Bloomberg. So China may embrace debt supply surge on fiscal support. There we got that there. And China's economy-wide prices in longest decline since 1999. The broad measure of prices contracts for fifth straight quarter in second quarter of 2024. So that's what we've got going on over there. Almost 200 million worth of freight futures and tankers changed hands yesterday, the highest volume in a while. We are playing this on the website if you want to know those companies. And they were up quite big today. Peter Lynch says, your ultimate success or failure will depend on your ability to ignore the worries of the world long enough to allow your investments to succeed, says Peter Lynch. Patrick Karam says, only happened 3 previous times in over 100 years, 1931, 1970, and 2002. It's getting ready for the next one right now. And this is the historical capital rotation events in favor of gold, and we are starting to break to the downside, where gold is going to start to outperform the S&P 500, and we're right there ready to break on momentum. So this is distance from 36 quarter moving average, which is momentum. It's basically momentum. Now here's something else I want to add here, guys. I'm going to add something else real quick. I use this in some of my presentations, and I just want to pull it up one last time for you guys. You know those times, 1931, 1970, and today? Check out this. U.S. stocks versus bonds returns, 1931, 1969, and 2022. This is the beginning of those commodity bull markets in every single instance, every single time. And what happened? 1931, 1969 is right before this 70 breakout. 2002, and then we have another one here that we're breaking out. That is when we get a paradigm shift in the bond market and the stock market, and money rotates into commodities and gold and precious metals and all that stuff. We are there right now. That is it. These all have significance. And what that chart I showed you is that bonds and stocks both went lower, and that was the increasing interest rate environment that did that. Warren Buffett's 3 most important words in investing: margin of safety, says Warren Buffett. And what that is you get a margin of safety when people get fearful. You buy the undervalued, so your intrinsic value, and this is under that intrinsic value. And then you have a margin of safety and you want to sell into the overvalued. And that's exactly what he's doing. He's selling the overvalued companies like Apple and whatever else and buying the undervalued stuff like Oxy. And I think he just purchased the whole company of Oxy, Occidental Petroleum here. The whole thing. So yeah, that's what I'm doing. I'm buying the undervalued stuff. If you guys, I will help you guys become successful in this future through the midweek updates and the question and answer sessions. I feel compelled to help you guys as much as I possibly can, because this is a huge thing that is coming ahead of us in oil and precious metals and even some of these other commodity areas. Absolute incredible opportunity here. And we're all in this buy zone right now. We put in these big double bottoms and stuff like that. They're all ready to come up and make this big move. And this move from undervalued to overvalued, this is what drives this as a real estate cycle. That's what drives it. Commodities measured by the Bloomberg Commodity Index are on the verge of breaking out. No, really, I didn't notice. I'm just kidding. If this happens, we'll see a higher low than the peak from 2016, 2019, signaling a powerful bull market for commodities. Exactly. And if you guys want to know how to play this, talk to me. Talk to me, Goose. That's what I'm going to say. Bob McNally says, we could have an air pocket. The macro is awful. China is awful. OPEC Plus needs more discipline. We could see lower levels from here, but I think we should position to buy with both hands for a multi-year boom cycle, with the main drivers being, and he's got EVs, ICE cars not coming on fast enough. Politicians aren't willing to push fast enough, and demand is not about to peak. So he's talking about hydrocarbons. When the surprise hits that we are structurally short hydrocarbons in the medium term, that's the play in Bob's view. Correct. He is completely correct on that view. Hydrocarbons are the play. It says OPEC calls out the Wall Street Journal, says the $50 oil article was completely fabricated. I called that out yesterday. It looks fabricated, like they're trying to hold the price down through that article. Oil is down because of soft EIA inventory report, right? Wrong. Oil is down for the same reason it is every other day. State bank suppression of strategic commodities continues unabated. I continue to buy non-Canadian, deep value international micro-cap E&Ps. Yes, there is a bunch of crap going on, but they're not going to be able to hold this down, guys. They're screwed. They're screwed. And that's at Zero Hedge Fake OPEC News. Druckenmiller said yesterday that on 4 separate occasions, he's lost more than $1 billion in a 24-hour period. Hey, it happens, guys. It happens. Losses come and go. Oh gosh, not this guy. And that's where we got it ended. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys are interested. Mayday coupon code if you want a discount. The yearly membership has a much larger savings. You can swap from a monthly membership to a yearly membership if you like, and gather those savings or get those savings. So check it out. It's savings not only for this year, but also for future years as well. And if you guys have been members for a while, I do have other discount codes for you guys. It's the same one as the Mayday discount code if you need it. But that's what I've got for today. We'll catch you next time. This is Finding Value.